Hey everyone, Les here from BG Trading. Hope you are well. Today is February 21st, 2022, and I'll be talking about A2 Milk, which the ASX code is A2M. I'll be also talking about Tyro, which the ASX code is TYR. Both stocks have gone in completely different directions after they announced the half-a-year results. I'm going to discuss why it is so important to have a strategy in place. Because if you don't have a strategy, you cannot protect yourself and you cannot exit or lock in profits. So let's have a look. Just want to remind you, this is not a financial advice, it's just us from BG Trading, sharing with you how we apply our strategies to know when to buy and when to sell stocks, how we set up targets, stop losses, and much more, all in this channel. So if you like, please share this video with someone that you believe could be helping. Also, subscribe to the channel. Now, let's start with A2 Milk. So results today was actually better than expected, and that's why investor has jumped back into the stock. Potentially also helping off short traders closing their positions. It looks like, according to this report, the worst is behind. The company still struggle, but we have seen some revenue growth, which is the first indication that things could start improving as we speak. A2 Milk has reported this morning with revenue growth outlook for FY 2022. It has slightly improved, as I said. Revenue in the second half of 2022 that includes Mataora Valley Milk, which, by the way, was a very good strategic move from A2 Milk by purchasing Mataora Valley Milk. That's my personal opinion. Is still expected to be higher than last half year, which is the half a year of 2021, which is obviously an improvement, exactly what investors want to see. Because if it's worse, then obviously the company we have taken another downgrade. Now, although the growth is expected, the earning is still going to be flat according to the company. So then I believe this is could be just a confirmation that this consolidation phase is even stronger now. Because obviously, as the stock trades into this channel, let's just show you here, as the stock trades into this channel, ideally you want to buy the stock when it is at the support level, which is the bottom of the channel, right? With stop loss just right under this bottom, right? That's what we want to do ideally. However, if a lot of people get skeptical that the stock will keep going down, I believe now we could see a further consolidation and potentially a breakout from the top. That's what we wanted to break out. Interesting enough, there is from what I've been trading today, between like $5.50 and $6, we still have another 30% to run. So, and a bullish intersection. Remember that bullish intersection, that's when we buy stocks. Bullish intersection. If you don't know what bullish intersection is, buy when the yellow line is crossing the red line. Yellow line is EMA 9, exponential moving average if you don't remember. And the red line is SMA 40, our other indicator for BGS 20. It's a simple moving average. So that's when, obviously, this is not a green, this is red. This is bearish intersection and bullish intersection. Bullish intersection, that's when we buy. We did trade this stock last year with 20%. Then we did another trade as well. We're always buying at the bullish intersection, actually, not after. Because after, you're actually missing a little bit of profit already, but at the bullish intersection. So A2 Milk for us, it's now, I would suggest, according to our strategy, according to the fundamental of the company, results that we have today, that we most likely will see further consolidation within this range, which give us good trading range again. And yeah, so it's a stock to hold at the moment and potentially sell around this top level here. If things keep improving, even if it's slightly improving like this, we could even see a breakout. But I wouldn't suggest a breakout just yet. I suggest in the next 3 to 6 months until the full year result, I would say that we could see the stock ranging all the way up to $7 and then falling again, and then maybe even breaking out after the full year result. This is my taking on A2 Milk. A hold, buy at the moment, hold position, and have an exit point. All right, have an exit point. We depend. Remember, we depending on the company actually delivering earnings growth. If the company doesn't deliver, that will fall again, and if it get worse again, they will even fall harder. So always be skeptical and use this strategy. Now let's see what's happening with Tyro. Also reported that the EBITDA has been slashed due to some higher costs, and obviously that put a lot of investors away and has triggered some short traders, investors as well, which is not a good to hold long. Now, let's see why it's so important to have a strategy. Now, our VIP members, we did enter together with our VIP members, and we don't get right all the time, guys. We do some entries that the strategy fails, because there's never going to be 100% guarantee in the market. But we have to have a strategy. 5th of November, we enter into Tyro, and we have the stop loss just under $3. Now, think if we haven't had the strategy, if we haven't had the stop loss in our strategy, what would happen is we will be taking a massive dive all the way from $3 to $1.60, which is 46%. You wouldn't want it to be 46% down in stock. So that's why we take stop losses. That's why stop losses is in there in our strategy to follow. So you need to follow stop losses, and also need to follow the target. So if you don't sell the target, a lot of times, especially stocks like this, you will miss the profit and even become a loss. You don't want to miss the opportunity. You don't want to miss all the time that has been waiting to complete the trade. So what I think is going to happen with Tyro, at the moment, I think, honestly, I think Tyro is a buying opportunity, especially now 160, but we don't know where the bottom is. We don't know what the bottom is. It could be a reversal right around the corner, but we need to see a sign of reversal first, rather than gambling into picking up the bottom. So once we have a reversal sign, I'm talking about something like this, Tyro is a very volatile stock. You see, this is a reversal sign. This is a reversal sign. That's what we want to have. Or something like this, big green candle tomorrow, that will suggest that the stock is bouncing back. But at the moment, we don't have. So if you don't have a reference or indication that the stock is bouncing back, we better be out of. Especially if there was a stop loss in place. Better be out. Furthermore, Tyro has been affected by the fact most of the tech sector has been sold out. So it is classified as a tech stock. Some people confuse the Tyro is a buy now, pay later company, but it isn't. It's completely different. It's a merchant, it's more like Square. So it's a tech company that basically is a merchant and has a bank license, completely different than these other players. So watch Tyro. I think it is a potential opportunity to buy sometime in the next few days, but not yet. Let's see how deep it goes. And let's see if there is a reversal. Once there is a reversal, then what a trader needs to do is set up a stop loss under this channel or under the lower channel, and then set up a target as well. Once you have a target and stop loss, then you enter in a position and wait. Wherever triggers before, then you sell. Obviously, hoping that you are buying at the right time using strategy, buying at the right time, and rather than taking stop loss, you're selling at the target. That's what we aim for here. Okay, so this is my take, and that's why it's so important to have a strategy. Because if you haven't had strategy, if you haven't had stop loss here, you would be taking 47% loss in today's, in the last few weeks fall. Stop loss is a must. Following strategy is critical for success in trading. I hope you enjoyed the video. If you have any questions, please put in the video, put in the description below, and I'll see you next time. The whole idea when we designed BG Trading BGS20 strategy was to use only a set number of indicators to make it simple and clear to understand and to be able to apply our KPIs very easily and very effectively. So you don't have to be any Wall Street smart person to be able to apply those strategies. We really hope this course will help you to make better decisions and make successful trades. See you in the course.